Let's take one more practical question. Suppose these 5 journal entries have been passed or made during the year in a form. Number 1, opening journal entry as on 1st April 2012. Cash account debit 6,700, opening stock account debit 100, to capital account rupees 6,800. Next, purchase account debit to cash account rupees 1,000, cash account debit to sales account rupees 3,000, loss by theft account debit to cash account rupees 500, loss by fire account debit to purchases account rupees 200. Closing stock as on 31st March 2013 rupees 100. Now we have to see how many accounts are involved or how many items are involved in the journal entries during this year. Number 1, cash account, opening stock account, capital account, then purchases, sales account, loss by theft account, loss by fire account. So 7 accounts are involved in the journal entries. So open all the ledgers: cash account, opening stock account, capital account, purchase account, sales account, loss by theft account, loss by fire account. Let's start ledger posting. This is the opening journal entry of the firm. It means this is some ongoing business. This business was not started during this year. Maybe the proprietor has been running this business for 1 year or 10 years or 50 years. We don't know and we are not concerned with that. So first of all, open the cash account. So we have to debit 6,700. So write down on debit side 6,700 and the date will be, because this is the opening entry, you will write down 1st April 2012. So what will we write on the debit side as narration? Because this is the opening balance, so we'll write down to opening balance or to balance BD. To balance BD means to balance brought downward, means this is the closing balance of yesterday. So you should write down to balance BD rupees 6,700. Now opening stock account. Opening stock account has been debited by rupees 100. It means you will have to debit opening stock in the ledger posting, or you will have to write down rupees 100 on the debit side of opening stock. So what will be the date? Because this is the opening entry, you will write down 1st April 2012 to balance BD rupees 100. Now capital account. Capital account has been credited by rupees 6,800. It means credit capital account, or write down 6,800 on credit side of capital account on 1st April 2012. So what will be the narration? By balance BD, or you can write down by opening balance. So you should write down whatever your teacher suggests you. If he likes to write down by balance BD, then write down by balance BD, otherwise you can write down by opening balance. But I'll prefer by balance BD rupees 6,800. Now purchases account debit rupees 1,000, come to the purchases account and on debit side write down to cash account rupees 1,000. Cash account has been credited by rupees 1,000, come to the credit side of cash account by purchases rupees 1,000. Now cash account has been debited by rupees 3,000. So write down on debit side rupees 3,000 to sales. Then sales account has been credited by rupees 3,000. Come to the sales account on credit side rupees 3,000 by cash account. Now loss by theft account debit rupees 500. Open the account loss by theft account. Loss by theft account debit rupees 500. It means loss by theft account must be debited by rupees 500, or we can say on ledger posting on debit side we should write down rupees 500 in the amount column. If we write down 500 on the debit side of loss by theft account, it means loss by theft account has been debited by rupees 500 in the ledger posting, or we can say loss by theft account has been posted by rupees 500 on debit. Now to cash count rupees 500. Come to the cash count. To cash count rupees 500 means credit cash count. It means write down rupees 500 on the credit side of cash count. So the date will be 4 and the narration will be by loss by theft account, because when cash count was credited in the journal entry, the opposite account was loss by theft account. This was the debited, so write down by loss by theft account. Now come to the next journal entry. Loss by fire account debit to purchases account rupees 200. It means debit loss by fire account and credit purchases account. So come to the loss by fire account. It should be debited by rupees 200. What it means? Means 200 should be written down on the debit side of loss by fire account. So what will be the narration? To purchases account. Because when loss by fire account was debited, the opposite credit account was purchases. So write down to purchases. Now to purchase account rupees 200. What it means? Purchases account should be credited by rupees 200. Come to the purchases account and write down rupees 200 on the credit side. What will be the narration? By loss by fire. Because when purchases account was credited, the opposite account was loss by fire. So by loss by fire account is 200 and nothing to do with the closing stock. So in this way we have completed the ledger posting. So what will be our next step? The next step is to find out the closing balances of each and every ledger. Closing balance means the balance CD or the balancing figure of each and every account. So let's move to cash count. The total on debit side is 9,700. So what will be the buy balance CD? Buy balance CD will be 8,200 rupees. Now the total on both sides 9,700. Opening stock. Buy balance CD rupees 100. Total on both sides 100. In capital account, to balance CD 6,800. Now total 6,800. Purchases account. The total on debit side is 1,000, but the total on credit side is rupees 200 only. So write down buy balance CD 800. Now total on both sides rupees 1,000. Sales count. The credit side total is 3,000. So what will you write on debit side? To balance CD rupees 3,000. Now total are equal. Now loss by theft account. Debit side total is rupees 500. So on credit side, please write down buy balance CD rupees 500. Now the totals are equal. Now loss by fire account. On credit side, please write down buy balance CD rupees 200. In this way, we have calculated the closing balance of each and every account. So what we are going to do now? Of course, we are going to make trial balance on the basis of closing balances. You know, trial balance is the list of closing balances of each and every account. So, you know, we use the formula of Caesar, means left side will go to right hand side will go to the left hand side. So cash count, buy balance CD 8,200 rupees. Take it to the debit side of trial balance, cash 8,200. Now come to the opening stock. Buy balance CD 100. It will come to the debit side of trial balance, opening stock 100 rupees. Now capital account, two balance sheet is 6,800 on debit side. Come to the credit side of trial balance, capital 6,800. Now purchases account. On credit side, buy balance CD 800. Take it to the debit side of trial balance, purchases 800. Now sales count. On debit side, 2 balance CD 3000. It will go to the credit of trial balance. Sales rupees 3000. Now loss by theft account. On credit side, it's 500. It will go to the debit of trial balance. Loss by theft account rupees 500. Now loss by fire account. Buy balance CD on credit side rupees 200. Take it to the debit side of trial balance. Loss by fire rupees 200. So on debit side 8,200, 100, 800, 500, 200. Total is 9,800. On credit side only two items are there, capital and sales. And the total will be 9,800. Now write down closing stock as on 31st March 2013 rupees 100. It should be noted down at the footnotes of trial balance. Be careful. Trial balance, whenever this word is written, it should be written as trial balance as on 31st March 2013. And if the both sides agree, I am to say both sides total are equal, it means we can assume that no error has been committed during the year in our accounting process.